Hello, everybody, and welcome back to this episode of the Cadre Animal Health Real Estate Channel. Thanks for joining us. We are a family of commercial real estate companies, including Cadre Animal Health Real Estate and Cadre Construction, Bluefin Design, Kudu Realty Partners, and Paramount Company and Floors. We're coming to you from the great and weird city of Austin, Texas. And today I'm joined by my friend and colleague, Brei Silvia from Live Oak Bank. Hey, Brei.
Hi, thank you for having me.
Thanks for being here. We've done this a couple of times before. I'm not going to tell anybody that we're reshooting this episode, am I? I think I just did. So just a quick reminder, if you like the content and the education that we provide through this channel, please give us a like and consider subscribing to the channel. And if you want to reach out and talk specifically about your upcoming project, just a thought of a real estate deal, whether it's buying or selling real estate, but more particularly a vet clinic, animal hospital, a high-end boarding facility, ER facility. We design, develop, and build in that niche. We love this space, really love the veterinarian world, and it's something that we're very passionate about. So consider reaching out to us with the email address provided or the website provided in the comments. So Brei, I'm going to ask you to give us a little bit of your background and your bank's background on this first episode. This is kind of one in a series of 4 or 5 that we're going to do. And then if anybody wants to hop back and listen to this in some of the next episodes, they can do that. But tell us about you. Tell us about Live Oak.
Well, thank you, first of all, for having me. So not to bore anyone with my career, but I have been in the commercial lending side for 25 years. But for 16 years, I have been dedicated to lending to the veterinarians throughout the United States. And that brought me to Live Oak just north of 18 months ago. I joined Live Oak Bank. And Live Oak is known as the doggy bank. And we were founded in 2008, specifically and solely lending to veterinarians throughout the United States. And Live Oak is headquartered in Wilmington, North Carolina. We are an iCloud digital-based lender that lends in all 50 states, including Puerto Rico and U.S. territories. And we work within defined verticals. And what that basically means is there are around 1,100 industries to choose from, and we've selected 35 industries that we want to lend in. And I so happen to lend in the veterinary space. And it's wonderful. We currently have over 1,000 independently, privately owned practices in our portfolio.
Those still exist.
Still exist. We've loaned over $2 billion since our inception. And our loan loss default rate, why we love our doctors, is 0.38%, 38 basis points.
Wow, that's fantastic.
But we help veterinarians, Ron, start, build, expand. I would say our true expertise is in ground-up construction, but we help startups, whether they're specialty veterinarians or GP independent practices. And we also help them, as we like to call, transition out of ownership. Maybe they still want to continue to work with a corporate consolidator, or they want to sell to a Main Street buyer. And then, of course, there is I've outgrown my space, and I need a larger facility. And I'm ready to hire more associates, and I'm ready to take my practice to the next level. And that's where we find to be our real niche.
Okay. And I'm sure there's a lot of repeat business in what you do. It's a first facility, and then it's a second, and then it's maybe lending for other reasons other than just real estate?
Other than just real estate. Yeah. So we have some, especially ER, critical care, urgent care. Perhaps they want to start in a leasehold space because it's capital intensive to own real estate or ground up construction. Sure. We help them acquire practices. And we also, again, we like to consider ourselves connectors in the space, whether working with veterinary consultants, industry, veterinary specific developers, builders, designers like yourself, all the way to CPAs, corporate consolidators, we're connectors in the space. And so for any of our clients that are clients of ours that have facilitated a loan through Live Oak Bank, we have business analysts, a group, or what we call baggers within our team.
That sounds so derogatory.
It sounds, well, their job is
Can I talk to my bagger, please?
Well, they're an analyst group, but we love them because they collect a data mine of information. Our clients provide us annual tax returns. We actually use that data to make us better lenders in the space. We use the data versus checking off the check mark, but our analysts do go out and visit our clients at minimum one time every 18 months.
All right, so let's talk about that. You say, I go out and visit our clients. Now they're all over the country, right? So you won't see a Live Oak Bank bricks and mortar branch.
You will not.
Right. So you're not providing the typical savings and checking accounts, the safety deposit boxes. You're a lending bank.
We are a lending bank. We have a savings account. If someone wanted to download our app and go open a savings account, sure, we would love that. But for the most part, yes, we are the number one SBA lender, number one USDA lender in the United States. And we also, 40% of our business is conventional. So our business is lending to small business owners, and we do it throughout the country.
All right. So you're an expert because either you intended that perfect segue or you just stumbled upon it. I'll assume you intended it. Let's talk about SBA and conventional.
Okay.
So I think that there's a lot of baggage from what SBA used to be. There's a lot of misconceptions, and probably rightly so, what SBA was for a long time, the fees and the hassle and the headache and the red tape. And I'm sure there's still some of that with it. Give us the basics, if you can, of why somebody might go SBA. I know this is really high level at first, but why someone might go SBA versus conventional and vice versa.
Sure. The main reason most of our borrowers choose to go SBA is because they're looking to minimize their down payment. They would rather hold on to their cash, especially during these times. They'd rather hold on to their cash, and they're seeking anywhere from a minimum amount down to 0% down. And SBA allows us to work off projections. So you have a company and your practice, you're looking to expand, and your practice, maybe you're looking to double your exams or exam rooms or double your space. You want to offer additional services, hire associates, and grow. However, your historical performance based on your historical tax returns is unable to show you can afford this new proposed debt. SBA allows you to work off projections. And so we're able to take projections with sound written assumptions in our understanding of the space, and we're able to get that veterinarian into a larger facility with little to no money down.
Okay, so when you say projections, let's just be clear on that. It's not, first of all, is it a cooperation between the SBA and your bank in putting this together?
So the SBA was founded in 1953, not to bore anyone with history, but it was founded in 1953 to really help bring capital and to assist small business owners. So in every major metropolitan area, there is a small business development center, an SBDC. The Small Business Development Center will help you in writing a business plan or preparing financial projections. It will help you in starting your business. And it's not specific to veterinarians. It's to any industry out there. And so the SBA recognized that in order for banks to be able to provide funding for startups, which is typically and historically a high-risk business to be in, the SBA has put forth a set of rules. And as long as the lender is eligible to provide the program, the SBA program, and adheres to the rules, those loans, for the most part, majority of SBA loans are government guaranteed. 75% of the loan is guaranteed by the SBA.
Okay, yeah. So you're taking them through the process. They're ultimately going to have paperwork for the SBA, but you're holding their hand through that process. You certainly, how many SBA loans do you think you guys close in a year?
I can tell you,
or volume.
Volume-wise, north of $2 billion.
Okay, so that's a process that Live Oak and your team, they're very familiar with, and there's a fee that will be paid to the SBA. Some might say, well, why would I want to pay that fee? And I think what I've just heard you say is, well, it's probably worth it because number one, you're getting in for very little money, if not no money down, correct?
Correct.
And there's the borrower, right, is offloading, the bank, is offloading some of that debt to the SBA at a fixed interest rate? Is that the case?
Well, it varies. I would say now in our interest rate environment, you have to be, I would say, very much eligible for a long-term fixed rate. Okay. Most lenders in the market, we are a portfolio lender. To the audience out there, that means we hold on to our loans and we service our loans.
You're not selling them off.
Correct. We're not selling them off. Every bank has their own business model. And so for Live Oak Bank, yes, we have the option where we can offer a fixed period of time where we lock the rate for a fixed period, but every bank is different, and that's an internal bank decision.
But is that the case with the portion of the loan that is that's guaranteed by, or actually taken, I think in the, not the 7A,
Oh, you're thinking the SBA program, there's two products,
Yes.
primary products that are most popular,
The
7A and
504.
504.
And the 504, the SBA is actually they're providing funds for 40% of for the loan.
Yeah, their local certified development corporation,
There you go.
yes, is providing.
So not to get too complicated, isn't that portion though fixed?
That portion is fixed.
So that's where I was going. At least a portion of the loan in these crazy interest rate times that we're experiencing, that's another benefit. Part of their loan is at a fixed rate.
Yes, on that particular program. So you have two different
504.
loan products. That's correct. That's right.
Yeah. So just to be clear, a 504 loan, I'm going to see, you tell me if I'm right because now I'm playing your game. The 504 is primarily just real estate.
Correct.
The 7A is if the borrower wants real estate plus some equipment, money for equipment, plus some startup capital. It's not just for real estate, correct?
Correct. It's not just for real estate. The 504 is dedicated for fixed assets only with a useful life greater than 10 years.
Okay.
And the 7A program is used for anything.
That's right.
Working capital, acquire a practice, start a practice, ground up construction. You can use it for anything.
Okay. And give me a real quick synopsis. Why would somebody say, it's just not right for me, I want to go conventional? When somebody tells you that, why are they normally making that decision?
Because when you're working with a bank, when you're going with SBA, SBA is not confined to an appraisal value.
Okay.
We're willing to lend beyond what the collateral is worth. When you're moving forward with a conventional loan, the lender will only lend you a percentage of what your property appraises for. Okay, and the key distinct difference is when you're entering into ground-up construction, as you know, you have soft costs, which is architect and engineering fees, building permits, impact fees, construction contingency. We can talk more about what each of those line items are. And those are essential to a project, but they don't necessarily lead to appraised value.
Okay. So sometimes people want a conventional, maybe to avoid the hassle of the SBA. Maybe they don't want to pay the fees. Maybe they have more money to put down.
Yes. I would say if you are liquid and you have a lot of money and you have an established practice, then that could potentially be a wonderful option for you.
All right. So let's do this. Let's wrap this one. This one's a little shorter on content because I wanted everybody to kind of get an intro to who you are. And I think that's a real good topic for kind of episode 2 on banking. Let's cut it here and let's talk then in the follow-up episode about those fees and those costs and kind of establishing a general budget for a project.
Okay, perfect. Right. Thank you.
Thanks for joining us, everybody. Again, please reach out to us if you have questions about your project. We're going to continue this conversation with Brei, and we hope to talk to you soon. Thanks.